Um, good afternoon, ladies and gentlemen, and welcome to this week's live trading session and trade review session. So if you have any background noise, it's just me with one of the news channels on, just to see the PCE data, or the core PCE data, CPI data as that comes through in about 9 minutes or so. The markets, as you can see, are lower, both the Dow and gold, the two markets that I've traded this morning. Did do a DAX trade very early this morning at 15,541. We're about 170 pips lower on that trade. Had I held it, unfortunately I didn't hold it. Just to talk a little bit about that paired trade that I put on about probably about 20 past 10, quarter past 10 this morning. Sold gold at 1821, 60. Sold the Dow at 33,108. If you were still holding that trade now, you'd have the best part of 250 pips worth of profit, and it's been a little bit better. For those of you who are reasonably new to that form of trade, which is something that I sort of throw out there every now and again, usually when both markets are well bid, so if you've seen a significant rally in gold, significant rally in Dow, I'm inclined to sell both of those and look for one of them to collapse. It may well be that you take a small loss on the other, but the anticipation or the idea is that the profit on the one that collapses or rallies, if you're a buyer of both of these, the profit on one of them far exceeds the loss on the other. Of course, both trades can go against you, so timing is important. And just with the weakness that we're seeing in both of these markets at the moment, the anticipation was that one would sell off. What's happened is that both have sold off, and it would be a sizable profit, as I've already mentioned, if you were still holding those trades now. I took about 45 pips or so out of the trades, closed it down quite quickly, closed it out at different times, which is not the objective either. Ideally, you should close both the trades at the same time, but because I had limited positions on, I did hold that position for a little bit longer. So as you look at the screens at the moment, the Dow has picked up off of its lows. We've only probably been 20-25 pips lower. Gold has been as low as 18.15 really. We're trading at 18.16 at the moment. So we are pushing back towards those lower levels that we've seen today. And there is a bit of nervousness ahead of the data that's about to arrive. So I have a flat position. I have two limits well below the market. I think 1807 in gold, which is a big move lower, and then I think about 32,820 in the Dow. The reason for the Dow trade, as I've mentioned in my market comment this morning, as you will have seen with some of the trades that I did yesterday, that 32,800 to 32,850 is an area that's been really well supported over the last couple of months, and I would hope that will certainly continue. So just going to go to the Dow now. We have about just under 5 minutes now to the data. Also, don't forget that there will be a second run at this information. Obviously, we're going to see a lot of volatility. Probably going to start in about 4 minutes or so, maybe 3.5 to 4 minutes or so. We'll see some fairly drastic movements on the markets. You'll probably have, depending on which broker you are using, you'll probably find that you have brokers who try to avoid offering prices during the first period, and then we're going to get some significant movement based on the big firms' appreciation and examination of the numbers to see ultimately what the Fed are going to be doing going forward. one of the central bank governors was talking a few minutes ago, and the general output of that meeting or that conversation was that rates need to stay higher. So the whole idea of higher for longer, I think, is one that the markets readily accept. I don't think that's going to necessarily upset the markets, but there is a lot of speculation at the moment, excuse me, around what the next rate increase will be. Will it be 25 basis points as it was at the last meeting, or are we going to see continued pressure to go back to 50 basis points and get closer to that 5% terminal rate quicker than maybe we are at the moment? So that's really the background to that, I suppose. So just opening up the daily charts here and just really looking, and it's not going to be too obvious from the daily chart because well, no, maybe it will. I mean, here you see here the level that I'm showing on the screen at the moment is 32,900. We're going down to about 800 there, and you can see a lot of areas here. These are daily, so a lot of movement in this area where we saw testing of this 850, 900 level. Significant bounces back to the upside, falling back down to that level. Ultimately, the next. Now we did fall through it a little bit, but that breakout was ultimately proved false. So if you can see on these candlesticks here, there has been a lot of trading between that 32,300 and 32,800 level. So a bit of another 500 pip range. But you can see the congestion there. The one time or a couple of days there that we went down and tested that 850 level. Again, it's been protected and we've moved back to the upside, trading back in that range that we used a couple of weeks ago. That was very beneficial to the type of trading that I was doing at that point. And then again, we're back here testing that 800 to 850 level. So I think yesterday we went down to about to just above that 800 line, and obviously had a fairly decent recovery into the close. And I know that we took a couple of trades on that particular or on those particular dips. Majority of the trading yesterday was to the from the short side of the market, and as you'll know, yesterday was a nicely profitable day. Just a couple of other things to look at here whilst we got the daily chart open. Moving towards oversold conditions, nothing spectacular necessarily to report there. We've got less than a minute to go now to the data being released. So it's not going to be heavily time specific. I have a slight delay here with the news feed that I'm using, so you may see the information a little bit quicker than me. But we are going to start to see a bit of volatility coming in, and as I said, we're already seeing the markets widening out here a bit. You've got a 10 pip bid offer spread at the moment that may get a little bit wider, but we're going to see a bit of movement. So there's every chance that the bid that I have, and I'm just going to look back at gold whilst we're going through this. So gold is hovering around that 1850. It's just a big move to the downside there, down to 1811. Didn't hit my my bid just yet. The Dow came off to about 850 there, 870. So I'm not seeing the data coming through myself. So you more than likely will see it before me, but obviously we've seen a bit of volatility. Just looking there at the gold trade, and this is a 1 minute chart that we're seeing here on gold. You see that significant move to the downside and a pop back up. Had I had a limit bid in at 1810 as opposed to 1807, there is a good chance that would have triggered. So we're getting close to my limit bid on the Dow. I just need to open up one of my other devices to see whether we get a fill there. Could be a little bit more aggressive and buy into this now. I think so. I just missed there again on the limit on the Dow. Just gonna change the news vendor that I'm using. Sorry. So inflation is coming in stronger at 0.6. I think the market estimate was 0.5. So I would imagine that my limit bid is going to get hit here. It's tested it a couple of times already. So the numbers aren't particularly good. They follow on with the story that we've seen over the last number of weeks where we've seen inflation data that suggests we're not seeing the market or we're not seeing the Fed's policy having the effect that they would like it to. And again, I would imagine that after we see the opening bell this afternoon, there will be renewed speculation that we're looking for a 50 basis point increase at the next Fed meeting. So I'm just opening up my own positions here just to see if anything did trigger. So I have no open trades at the moment, so the limits are still working there. Gold is hovering just below the 1816 level. The Dow has been down to about 32,830, so I think on my limit I've missed by, let me just see where my limit orders are. So I can't see those at the moment. So look, I'll just continue to monitor those. Obviously we've seen a fairly decent jump off of those levels now, been up to 32,870. So if you did get a fill around those, around the limit bid that I was running in the market, obviously there was a decent profit at this time. So for those of you who were buying on dips and were a little bit more aggressive than me, then there is a decent profit to take there at this particular point. I'll continue to leave those trades in. We're a million miles away from gold at the moment, trading at 1817. The Dow hovers there around that 32,880 level. Don't want to be too aggressive selling at these levels. As I've already mentioned, it's a buy-in area for me between 800 and 850. I'm certainly going to maintain that approach for the time being. But what we'll do is we'll take the time to look back at the trading for this week, have a little bit of a discussion around that, and then and if you have any questions, answer those questions. As you can see, there's the trading for the week. The grand sum of 4 pips to the upside, and that's pretty much all on the back of yesterday's trading, which was a really good day, no losing trades. And then again, whilst it was a very sticky, very tight trading range this morning, there were decent enough profits of about 115 pips or so that's showing a slight profit at this time. Tuesday was obviously the bad day, as was Wednesday. Stopped out on both of those days. Got myself into the frame of mind that the Dow was going higher, and took some ugly stops on one DAX trade there at the top, and then 4 Dow trades throughout the remainder of the day. As I said, they were quite ugly. I was waiting for the bounce back up above that 33,500 level. It just never arrived. Being or not being active enough, not being prudent enough around the stops on that day, build up a decent profit prior to that particular thing. So was upset that I was giving much of that back, and a lot of the trading would not necessarily have been that sensible, and certainly held those trades a little bit too long. As you can see yesterday, as I've mentioned already, the trading was predominantly from the sell side. A couple of buy trades late in the afternoon, a sell trade right towards the closing bell that returned reasonably okay, and there was an attempt to sell again around 33,220 or thereabouts that just missed. And we've had a number of near misses again today. So I'm just going to go back to the markets. So we continue to hover around this 32,830 level. So again, getting close to the limit that I have in the market. May well be that as I finish this session, I might get a little bit more aggressive with a trade there. We're continuing to see the DAX come off. I mean, the DAX has suffered badly today. As I said already, the trade first thing this morning was at 15,541. May well be that we see a bit of a bounce at these levels. So I'm just going to buy. The offer changed very quickly as I went to buy that, so I don't think the price was particularly good, but so I've just bought DAX there at around 15,319. As we're finishing up here this afternoon, the gold is having another push to the downside, nothing spectacular. The DAX is continuing to come off. Obviously, we're seeing the euro weakening, we're seeing sterling weakening, so it's another dollar strength story that's coming into the market at this particular point, and a lot of that will be in relation to rates and how those are going to affect currencies from this particular point. So long DAX there, and just waiting to see if this limit is going to take, and it has taken in the Dow, dropped very suddenly there through that 820 level, so that should come through if that's where my limit was. I'm sure it was. Yeah, so I'm long the Dow at 32,000. Sorry, it was very slow coming through. So I'm long the Dow there at 32,817, and long the DAX as well. There will be another move as we approach the opening bell this afternoon. Gold is now down to 1812. I'm going to leave my limit bid there for a period, but I'm looking for these markets to recover. And it's a crucial area for me for this, for the Dow. In this particular zone, we are going to see a bit of spoofing, a bit of bullying this afternoon prior to the opening bell, but I'd like to see a bit of a lift as soon as the market opens in its entirety. But I'll update you throughout the remainder of the afternoon as I continue to trade and the markets continue to move. The PCE price index, it rose 5.4% year on year. The estimate was 5%, so you can see it's significantly bigger there, and obviously we're going to see renewed speculation about what the Fed is going to do at this next meeting. Probably too aggressive to sell gold at these levels, so really just looking to catch a bid on the way back up. The DAX continued to trade off down there to about 15,290, and the Dow for the time being is continuing to hold 32,800. So I'll join you on Telegram very, very quickly. Thank you very much for joining me today.